Right, so I'm back. What I want to do in this webinar is to go through the trades that took place on Friday and yesterday, being Monday, and naturally we're going to be doing live trading here as well. But I also want to go through using the hourly charts to maximize your gains, whether you're trading on TNT or E75 or any other system for that matter. So I've got the chart set up for all of that right here. And you'll see on my hourly chart, I've got a bit of info going on this chart, which is not normally there. So I'm going to go through that with you as we get along. But first I want to go through Friday's trading. And the only one of note there on Friday was this trade on the dollar yen, which I'm going to now go through. And that was this trade here on Friday. And I'm just going to quickly go through this. It was a TNT trade. I know it was the non-farm payrolls down Friday, and I normally wouldn't be trading, but there was an opportunity to get in with a really small risk and an opportunity to take some profits from a trade which was very likely to go in our direction. And you can see all these reversal candles taking place right here in a cluster against, just about against this trend line that we had drawn up from the day before. And you can see there's a bullish candle there and a couple of reversal candles, and then bang. This was very surprising. I didn't expect this to take place so quickly, but we went up about, well, pretty close to 200 pips actually, more than 200 pips in a few hours. So just for those of you who were wondering and asking about it, there was the cluster of little reversals and what I call no-brainer candles, because the stop loss needed to be really small, and then there was the move that took place. This email I sent out to you guys with the chart, and a lot of people said that they managed to get hold of that trade, so well done on you. So that's all I want to talk about on Friday, because that was the only trade. Okay, there's some people saying the volume's a little low. Well, one person. Is anyone else having the same problem, or can you all hear me okay? Okay. I think it's just on your side there, John. Turn your speakers up, mate. All right, so let's have a look at yesterday, and there were some really good opportunities yesterday as well on both the euro and the yen. I just want to go through those very quickly as well. So let's go across and have a look at the euro. And this is that I actually traded these trades yesterday, obviously not on the challenge account, but I was working at my computer yesterday, and these setups just really leapt out and appeared out of nowhere. And you can see, yes, on yesterday the euro started kind of just drifting sideways and then began to move down. You can see we hit the lower Bollinger Band there, and we had a bit of a bounce with an oversold stochastic. But this trend line was nowhere near 3 hours long, this little move down here. And so the first thing one would have done, as I did, is to move the trend line to that high as soon as we moved lower. And then you can see we continued to move lower, and we've got this new trend line coming down over here. Now, once again, this trend line was also not 3 hours long. It was from 9 a.m. to just past 10 a.m., so about an hour long, that trend line. So no good to us. And then as soon as we made a new low, not a newer one, but a new one, the objective then is to draw the trend line out wider. And you can see, I can remove this one, and you can see now we do have a 3-hour trend line, and we hit the bottom somewhere around here. The trade actually entered over here, and that would have required around about 40 pip stop loss, the initial break of the trend line. And so naturally it was no good to try and get in on that trade as that trend line break took place because of the large stop loss. But I waited for a retracement right back down here, and I was able to get in at that little support level with literally only a 20 pip stop loss. And this went up from 38.20 up to 38.80. I took exactly 60 pips on that trade yesterday. So a really good trade on the euro yesterday, which naturally won't accrue to the challenge account, because the challenge account's only traded on Tuesdays and Thursdays. Now, there was also a trade on the dollar yen yesterday, which was really good, and which I didn't take, but some others pointed out. And however, in terms of the E75 system, the trade wasn't actually valid, as I've just recalled. But there we go. Interesting, because we had a move up, breakdown, retracement back to the underside of the trend line right there, and then the move down, which went about 30 pips. The only problem with this trade, although we had Bollinger Band confidence at the bottom, we had an oversold stochastic, etc., etc. We moved higher to the same situation on the top, except there was no Bollinger Band confidence. We had a trend line, nice smooth trend line, and then a trend line break, a retracement back up to the trend line, and then the move down back to the lower Bollinger Band. And you can see, in fact, just as a sideline, that yesterday was a ranging day, and we ranged from Bollinger to Bollinger, which is a good example of how the price action actually does that. And in fact, it carried on right through into the night, and we moved between the Bollinger Bands constantly throughout the last 24 hours. The problem with this trade, only one problem, and that is that the trend line went from the low at 10.30 to the high at 13.30. Well, not quite, actually. Around 1300, and in fact, if you take the top there, so trend line not really 3 hours long, 2 hours and 15 minutes at best. And so even though that was a trade that worked out for some folks, just be careful that you're not taking trades which fall outside the scope of E75. There's a very real reason, very good reason for the trend line needing to be 3 hours or longer, and that is because we want to keep out of the chop. We want to avoid the trades which are really going nowhere. We want some good solid trending action to occur before we enter the trade. So that's really the roundup of Friday and yesterday. In terms of TNT, I've got yesterday's charts. Now remember, we're actually bearish the euro right now, so we can have a look at yesterday. I'm not going to go over Friday in terms of TNT really, particularly on the euro, because of this rather dramatic, well, extremely dramatic movement that took place after the NFP results. But let's have a look. So, and this actually turned the week bearish for this week. And then yesterday, we're looking to sell into rallies because we're bearish. And you can see really nothing much happened there, except for a one up, one down, but it was in the wrong direction. We had a hammer bottom there on the euro, sort of midday my time, which really quite nicely was a no-brainer candle in many senses, and led to a nice rally. But however, we're looking to sell the euro into rallies because the direction's gone short. We're still bullish on the dollar yen, and yesterday there was, I suppose, there was an opportunity to buy. Hang on, we're not on the right page here. So yesterday, bullish the dollar yen. There were a couple of bullish reversal candles, but there was no retracement back down for us to buy off. And even though those worked out, I don't know, I suppose for 10, 20 or 30 pips each, there was no real action going on there. Certainly no no-brainers, and nothing to report on the dollar yen yesterday. So in terms of TNT, yesterday was pretty much uneventful, but in terms of E75, there was a nice trade on the euro, and as Tim points out, perhaps you could have squeezed out a 3-hour trend line on that yen, and that was the one that you took. I think, Tim, you sent me that email, so well done on that. All right, so any questions on yesterday's trading, yesterday's setups on E75 or TNT, and any questions on about Friday's email, which I sent you with a trade setup, and any comments, positive or otherwise, about your trading experiences yesterday or on Friday. Did anyone manage to get hold of that trade on Friday? And did anyone manage to get hold of those nice little E75 trades yesterday? All right, so let's go and have a look at what's going on today. And I'm just going to go through E75 and TNT in their bog standard state. And then a little bit later on in the session, I'm going to start going through some of the detail and some of the application of using the hour charts. All right, so let's have a look at, and these really are very simple, the setups for E75. There's the euro right now. As we stand, we've got a 3-hour trend line, which lasts from around about 2:30, so it's about 6 now, so it's approaching a 4-hour trend line this right now. Got quite a nice, rather a nice trend line, and you can see the price has just actually nudged up against the trend line without breaking through. We've hit the lower 100 period Bollinger Band, but just below there, There's the 200 period Bollinger Band, which we might just aim for right now. We've got an oversold stochastic, so we've got everything set up for a buy signal on the euro, so we'll keep an eye on that one. And that's on E75. And on the dollar yen on E75, you can see quite an interesting setup here. We've had a very pronounced Bollinger Band squeeze for the last 24 hours, and the Bollinger Bands have just got narrower and narrower. And this is what we were talking about earlier, that the price bouncing between the Bollinger Bands in an ever-decreasing sort of range. And as a result, the Bollinger Bands have contracted, because remember, Bollinger Bands measure volatility in terms of standard deviation, which is a statistical calculation for volatility or for variation or variance. And now we've just started to move down. You can see the Bollinger Bands are starting to spread out, and we're forming this trend line which is moving lower, which is also 4 hours or longer. And we've had the Bollinger Bands spreading out. We've had the stochastic moving down towards this oversold condition. So once again, we'd be looking at this one for a potential buy signal today, at the moment in any case. So we've got a potential buy on the euro, potential buy on the dollar yen, and those setups have not triggered a trade just yet. The euro may well trigger a trade in the next 5 or 10 minutes. Let's have a look at the TNT setups, and there's the euro. I don't know why this blue line's on here. And you can see we're looking to trade short on the euro today, because the weekly direction is short, and there's no setup there to do anything right now. We're looking for a bit of a rally and then a reversal candle, and so there's nothing at all that jumps out from the screens. And we're looking to trade the dollar yen long. I'll come back to the reason for all these lines and so on. Don't get confused by them, but they're just going to be part of what we discussed today. So we're looking to buy the dollar yen, and you can see once again all we've got right now for the last, I don't know, 5 hours are bearish candles. So we don't need to look at this until the top of the next hour. There's nothing going on there. So as far as today is concerned, we'll keep a check on the TNT charts every hour. But right now there's nothing to do on that side. And then we'll also be watching the E75 charts. And you can see there is some potential for long trades on both of these currencies. Nothing imminent right now on the euro, on the yen, but the euro might just be triggering a signal. Oh, who knows, in the next, perhaps in the next 15 minutes or an hour or so. All right, so that's really covered what's going on now, the setups that we have today. And we'll be trading these live today, of course, as we always do in the webinars. But what I want to do today is to carry on with some of the training course and spend about an hour or two on, there goes my phone, just telling me my bank account's empty again. There's 5 rands in this particular bank account. They send me an SMS every day. I moved all of my accounting out of that bank about a year ago, and 5 rands is about 50 US cents. And they spend about 10 cents a day on sending me an SMS to tell me I've only got 50 cents in my account. All right, so let's go through some of these questions, and I'm not going to start the actual training session right now until a little bit later on, once I get into my office, and then I'll let you all know that we're actually starting to do some training and teaching on using the hourly charts to improve your probability. So I'm not going to start with that right now. I'll do it once I get to my office. I'm still at home right now. It's pretty early in the morning here, and I've been up doing some admin and stuff since 5 a.m. So we're going to do some trading now. I'm going to turn the recording off, excuse me, for now, unless there's a trade that comes up, and then I'll switch the recording back on a little bit later on when we do some teaching, and that'll go into the Traders Club, the E75 Charlie Group library. I think I should just record these. The first question was on the direction hour by hour. Just recording this. Someone said they're finding difficulty determining the direction hour by hour. And the simple answer is we're really looking at the weekly direction, which in this case of the euro is short for the week. And so we trade short for the entire week, unless there's a weekly reversal taking place, which there isn't. So that's the one question I just wanted to go through. Here's a question. If the TNT is indicating short on the euro and E75 is triggering long, how do I handle the conflict in direction? Well, really, as I said before, you should be trading probably one system or the other. TNT is not indicating short. The the weekly direction is short. So that doesn't mean that we've got a short signal on TNT right now. And in fact, you can see we don't have any signals on TNT. I'll just get that up there. It's just kind of moving downwards. There's no signal to actually sell on TNT on the euro, whereas there could be a signal to buy the euro on E75. Now remember, E75 doesn't have a preferred direction, so there's no problem in trading E75 in one direction or the other. Now if you're in one trade and the other one triggers a trade in the opposite direction, well, then you have to decide which one you're going to go with. All right. Question here, why is the euro for the week short? On my charts, it's a higher high and a higher low for a buy. Well, let's have a look at the weekly chart for the euro, and I'll show you exactly why I've determined the weekly direction for the euro to be short. And here we go. This is the euro weekly chart, and you can see we've had an extended run up, 1, 2, 3, 4, 5, 6 weeks, and then we've got this hammer candle pattern, and we've got followed by this bearish engulfing candle with a spike high up against this resistance. And so I've determined that this is a bearish direction for the coming week. And in fact, if we decided that we were going to be going long this current week, this is the current week here, then our direction would have already reversed, as you can see. So if we'd chosen to be long based on the higher high and the higher low, we would have already had a weekly reversal on the euro. But the fact that I saw a spike high against resistance, a bearish engulfing type candle, or you could call it a dark cloud cover, I guess, if you wanted to, means that I've now reversed the weekly direction on the euro to short. I've done the same on the pound. You can see on the pound we've got this massive spike high against the resistance, the Fibonacci resistance, and a reversal pattern on the pound. So that's why I've chosen to change direction on the pound and the euro for the week, and we're now looking at shorts. All right, so let's get back to these current charts and go through some more questions. Question is, sometimes there's a large spread on certain hourly candles and hesitant to trade. Yeah, well, if the spread is too high, your broker might change or adjust your spread according to volatility. Not all brokers do it, but some might. In that case, if your spread goes up from 2 or 3 pips to 8 or 9 or 10 pips, then obviously you don't want to have to pay that spread, and you can wait for the market to quieten down a little bit. Question here, what are the best currencies for TNT? Well, I normally just say the same thing. You can trade any currencies you want with TNT, and you can trade any currencies you want with E75, but the currencies I prefer to stick to are the major currencies, and within those majors, I always prefer the euro and the yen, and the reason is because they're less volatile, firstly, and secondly, they're not highly correlated, and so I don't mind being, let's say, long the euro dollar and long the dollar yen at the same time, or vice versa, or in opposite directions, because they're generally not very well correlated to each other, and they're not as volatile as some of the other currencies, and they make a good combination to trade. Here's a question here from Henry, and I'm not sure what this relates to. Do we just hold our position and wait out the drawdown? That doesn't sound like a good thing to do, Henry, but I'm not sure what that is in reference to. So perhaps you could clarify that. Okay, so let's start this one again. I'm going to put it on tape. And we're talking about people not being able to pick reversal candles and not being sure of whether there's a signal or not. And I want to go back to, I'm sorry if I'm repeating this for everyone, but it's probably not a bad idea anyway. So I want to go back to the definition of a no-brainer, a no-brainer. Now, a no-brainer is a candle pattern which really sticks out on the chart as a no-brainer, i.e., very small candle, the market's ground to a standstill, we've got a really clear full stop or series of full stop type candles or series of tiny dojis or a hammer or a one up, one down, but with a really, really small size compared to the other candles around, and the market's ground to a halt, and you're able to get into the trade with a very, very tiny stop loss. Okay, that's the first definition of a no-brainer. The second definition is where the market's gone absolutely berserk. There are massive candles, massive reversal candles forming. They're bigger than all the other candles around. There are clear spikes or engulfing candles or a whole bunch of them in a row. There's, dramatic volatility going on compared to what's been going on in the last hour or two. And what you see is this real no-brainer example of a candle or a series of candles which are clearly different to the rest. And you'll often see that the market begins to move faster. The charts begin to move up and down faster. You get some more action going on, and it often happens after a market's been fairly dead that you see this stuff beginning to take place. Now that's the definition of a no-brainer, either a tiny, tiny stop loss, small, tiny candles, series of them maybe, market's ground to a halt, and that's a signal that there might be a reversal taking place, and so you want to be able to get into that but with a very small stop loss. And the second definition is when the market really just goes berserk and you get more action, more volatility, your charts start to jump up and down a lot more, and you get this, again, one or a series of candles which are bigger and move faster, and they're reversal candles. So, and the point I made at the end of all of that is if you're not sure about it, and you're not sure if it's a reversal candle or not, or it's a no-brainer or not, then it probably isn't, and you should rather stay out of the market. And there are always plenty of opportunities to pick up trades which you're more certain about. And I was saying, excuse me, I was saying that I had the privilege of having an hour or so with one of my clients last night, albeit in the pub. It was still a very important meeting. No, it really was. It was, and he wanted to know about moving into full-time trading and so on and so on. And one of the things that came up in trading, talking about trading, was the art of patience. Now, you could sit at this chart and at your charts and watch the whole day and see a few trades which you think might be reversal signals on the TNT system, but you're not sure. Rather just stay out and wait them out, and eventually at some stage in the day you'll see something that is a clear reversal pattern. It'll leap out from the charts. It'll look at you in the face and say, hey, I'm a reversal candle. But you might have to wait the whole day. You might have to wait 2 days. You might not be sure at any stage until you really see that there's something there. And when it does come along, believe me, you'll spot it. And that's the art of patience. Just wait it out. You see something that you think's a reversal, but you're not sure. It probably isn't. It might or might not be, but it probably isn't. And just be patient and wait for the next time. So remember that. Just keep that firmly embedded in your minds. A no-brainer means tiny, tiny, tiny candle with a tiny stop loss, or something that goes crazy on your charts, big candles, no-brainer reversals. And unless you see one or the other of those, we had a look at this example. In fact, let me just go back to this. And right here, someone asked earlier in the session, this candle pattern right here, is that a no-brainer reversal candle pattern? And I can look at that straight away without even thinking about it and say, no, that's not a no-brainer. You can see why. These two candles here, which might have, in fact, a reversal did take place after these, but that's not the point. These two candles here are the same size as all the other candles before and after. The actual reversal pattern is not very clear itself anyway. The stop loss, if you got in short here, would have had to have been around about 40 pips, I think it was. There's no-brainer setup. There's nothing going on there which is unusual activity compared to the rest of the charts. So that's not a no-brainer. And following the definitions that I've just put forth, it's very clear that we don't have a no-brainer candle pattern right there. All right, so I've just recorded all that, and now having said it twice, I think I'll move on to another subject. So on the euro, there's a potential head and shoulders pattern forming. There's the left-hand shoulder, there's the head, here's the neck, and the potential right-hand shoulder would be a rally up to the height of the left-hand shoulder, which would be around about 1.450, 4050. So about 200 pips from where we are right now. So you can see that would form a really nice head and shoulders, and the potential target for that would be around 134. So there's no problem with the potential for the euro to go long. It could actually go all the way up to about 1.4, maybe 1.4050, and then move down through this neckline lower. So just an interesting little aspect of the euro hourly chart that you can have a look at and ponder on whilst we're waiting for these trades. Go, or so, maybe less, and you can see we've got a break above the trend line on the euro. So I'll be looking to get in at around 38.70 or even less if possible, and then I'll put my stop loss beneath the low, and the stop loss would need to be below this candle here, which I think is the lowest. We'll check that out just now. And the stop loss there, the low is 38.50. The low here is 38.50. So I'd need to put my stop loss at 38.48, something like that. So if I can get in at 68, I'll be able to get in with a 20 pip stop loss. All right, so the hour's just rolled over, and I'm going to try and get in at 68. All right, so I managed to get in at 69, and I'm going to put my stop loss at 58. All right, so there we go. I'm in the euro long. Sorry, the stop loss needs to be at 48. Sorry, guys, you're quite right. I've just put mine in incorrectly. I put mine only 10 pips away, which is no good. Stop loss at 48. Sorry, thank you very much for pointing that out. Sometimes it's a little tricky to do all this stuff at the same time. So stop loss at 48. So I'm just going to put that up on here. Excuse the noise in the background, but everyone's getting ready for work and school and whatever. And I'm still at home. So it's long at 38.69. Stop 38.48. So that's a 21 pip stop loss. And we're in our first trade of the day. Let's see how this goes. Now in about 4 minutes time we'll be able to look at the TNT chart on the two currencies. And remember, we're short for the week on the euro, but we're already in a euro trade, so we're already long on the euro on E75, so there's nothing to do on there. And then on the dollar yen, you can see we've got a potential reversal pattern taking place, and that might even well be a piercing pattern, and we'd have to have a look at where the stop loss needs to be. So I'm going to have a look at that right now, and the stop loss on this trade would need to be beneath those lows on this fractal low, and that low there is, the very low is 97.85. all right, so I'm just going to put that in on the chart. So I'd need my stop loss at, like, say 83. So I'm just going to make a note of that. All right, so we can wait for a few minutes to see what goes on. But if we have the stop loss at 83, that means if we got in at, let's say, 1.3, that's a 30 pip stop loss. That's okay, I would imagine. But we need to make sure that we do have a clear reversal pattern on the dollar yen before getting into the trade. And right now, I'm going to have a look at it on the hour chart when we roll over. All right, so let's have a look at this candle on the dollar yen right now, and as we approach the top of the hour, and you can see that it doesn't fit into the definition of a no-brainer right now. And in fact, it's not even a proper reversal candle. What we've got is this sort of doji candle type thing, but it's not a very dramatic candle. But it would allow us to get in with quite a small stop loss. So there is an opportunity to buy the dollar yen there, but I think the probability of this moving higher immediately is perhaps a little small. So what I'm going to do is I'm going to wait for an opportunity for a no-brainer trade. Okay, I'm going to wait for an opportunity, which means that if we can get a retracement back down towards those lows at around just below 9,800, and we'd be able to get in with a very small stop loss, then I'd look at that. But for now, I'm going to leave that one out on the TNT trade for the dollar yen. You can see it's not particularly attractive. Tim, you say, what about the Euro TNT trade? Well, the Euro's on TNT, the Euro is short for the week, Tim. So we'd be looking for a short trade, and naturally what we've got here is a long trade. So there would be no opportunity to actually buy the Euro based on TNT at the moment. Right, so we just hit 20 pips on the Euro. So we can now start to move the stop loss, and I would like to place a stop loss just beneath this little low here that's formed. And the reason for that is if you draw a line across like this, from there to there, as if it's a kind of a head and shoulders pattern, I'd like my stop loss to be just beneath here, and I entered at 69. So I think we can probably move our stop loss to, let's say for now, 59. So I'm going to move that to 59. So that gives me a 10 pip risk only, which is fine. So I've got my stop loss at 59. I'm just going to do that across on my deal station. Stop loss is at 48. So that goes to 59. And right now we're 24 pips up, or thereabouts. So far so good on that trade. And at the moment I'm looking at buying the dollar yen as well. Now the reason is because we've got a reversal signal here on the pound, on the hourly chart, but it wasn't a no-brainer, and it also hasn't been confirmed. Remember we talked about spikes and engulfing candles and the need for confirmation of a spike candle. Hasn't been confirmed just yet. So what I'm going to do is just draw a little trend line down here. In fact, no, I'm not. I'm going to have a look at how this next candle closes, and I'll consider getting into this. If we can't get under 30 pips, then just in a half-size position. So I'm just going to keep on watching that 5-minute chart to see how we go on the dollar yen, but for now I'll just leave it. Right, so I'm putting in an order at 97.95, and that will give me a 12 pip stop loss. Actually, I'm right there now, so I can buy this at 96, I think. Damn, I might have just missed it. Just missed it. Let's see if I can get in at 95 or 96 still. And the reason is because I can now get in with a 12 pip stop loss. It becomes a no-brainer. And I'm going on the original reversal candle, Tim. I'm going on this original reversal candle on the hourly chart, this one here, and we're now an hour later. So I want to trade off that same hourly candle. So if I can get in at 90, oh man, you know, I missed it by 1 second as I was trying to get the recording going on the charts. Anyway, so I'm going to put it in at 96. So I'm going to put a limit order at 96, stop loss at 83, and let's see what happens. And with a bit of luck we might just get in there. But I think we might have missed it, so there you go. Alright, so it's the hourly rollover. If we miss that, then we'll go on a trend line break, which means we'll have probably a double spike low on the hourly chart. But if we don't get that, then I'll go for a very small stop loss. Does that make sense to you all? So the no-brainer will be a confirmation by a trend line break using E75 as a confirmation, or getting with 12 pip stop loss. So that's the reason for trading. In fact, it'll be a 13 pip stop loss, but that's worth the risk if we can get into that trade. Does that make sense to you all? To y'all? All right, so on the euro, we're up 26 pips right now. Make that 23. It's just dropped a bit. So we've been up about 30 pips. I'm now going to move my stop loss to break even on the euro so that there's no risk on this trade. And put that at 69. And do that on my deal station. And so my stop loss is safe there now, or my position is safe rather. And I've left the order in for the dollar yen to buy at 96. And if that doesn't happen, then I'll be looking to trade on the trend line break. I'm just going to adjust this trend line slightly now just to take those into account, just to make it a bit neater. And in fact, I could even take it from kind of there, which is also 3 hours long at this stage. So I've got a newish trend line there on the dollar yen. I'm looking for a break above that trend line in order to trigger a signal to buy, or if I can get a little limit order in at 96 on a buy. We're in the dollar yen long based on the previous hour's candle, this previous hour's spike low candle, and we've now managed to get in, the hour before the previous one rather, we've now managed to get in on a no-brainer trade, a 13 pip stop loss based on that reversal candle, and it's worth risking 13 pips on the presumption